This is Kyrill with Centerfin Capital, and this is our collective weekly for the week ending June 14th, 2024. It was a busy week. This week, we're going to discuss the economic data that we received. We had inflation data and some labor data, as well as a Federal Reserve meeting, and we'll give you our perspective on that. Secondly, we'll discuss the stock market, which hit all-time highs this week, and we'll give you our perspective on the makeup of this rise to all-time highs and what we think about it going forward. And then last but not least, Apple hosted their much anticipated WWDC conference this week and announced their much anticipated AI strategy. And we'll dissect that and give you some thoughts around that as well. Starting with economic data this week, as well as the Fed meeting. So we had inflation data, which is actually much better than expected. We had both the CPI, which is the consumer price index, and the PPI, which is the producer price index. And basically, those are a measurement of the prices of goods and services, one at the consumer level, one at the producer level. Both of them came in better than expected. The numbers themselves don't really matter. They're still, on the CPI, they're still above the Fed's target rate of 2%. However, the trend, which accelerated in inflation, accelerated in the first quarter, the trend has reversed back down, which is a positive because it gives the Fed leeway to lower interest rates. That being said, the Federal Reserve did meet this week, and they basically didn't cut, and they also indicated that they now anticipate only one cut for 2023. If you recall, the Federal Reserve at the beginning of the year was basically telegraphing 3 cuts for the year. The market was anticipating as much as 6 to 7 cuts for the year. Now the Federal Reserve is telling us that there's only going to be 1 cut. The market's currently anticipating somewhere in the neighborhood of 2 cuts for the year. Either way, we think that the number of cuts is less important than the fact that inflation is heading back in the right direction and the level of interest rates is likely lower from here. We've already seen it on the long end of the bond market, which is not controlled by the Fed. It's controlled by supply and demand. But we have the 10-year move down from a recent high of 4.6 back to 4.2. This is all positive for economic activity, and it's positive for stocks. We also saw the labor market data. We saw initial jobless claims came in hotter than expected at 242,000. They've been now in an elevated range. Obviously, the market likes that, even though that means there's more people getting laid off. But the market likes it because if the labor market cools down, there's less wage pressure and there's less inflation pressure. And so overall, good economic data for the benefit of the potential of future rate cuts, which obviously is good for the economy and good for markets. Now, that brings us naturally to markets. The S&P hit all-time highs this week again, before trading off as we record this on Friday morning. This is largely, again, we discussed this last week, we wrote about it, but it's largely driven by a handful of names, which is generally unhealthy. The breadth of the market, as they call it, which is how much of the stock market is actually participating in this rally, is not great, and it hasn't improved. Now, 2 things can come out from this. One is that the laggards, so the companies that have not participated in the stock market rally, can rally to catch up with the leaders. And the leaders have been, not surprisingly, like the big tech, as we've discussed many times in the past, NVIDIA, Apple, and others. Or if the big tech reverses, that obviously will put pressure on stocks. Now, you can look at stocks on a fundamental basis. Earnings have been growing, and we think there's tailwinds for the economy from fiscal deficit spending that will continue to provide support for earnings growth. But the multiples, so the PE ratio is a widely used multiple, is relatively high. And what does that mean for stock returns from here? The short answer is that nobody really knows, but the stocks are not cheap. They're not super expensive. They're certainly not in bubble-like territory. There's lots of comparisons of today's environment to the late 90s and early 2000s. We don't think that comparison really holds because in the late 90s and early 2000s, a lot of the leaders of the stock market were highly speculative technology companies that were not good businesses and they were losing money. This time, the leaders are actually high-quality businesses that are making lots of money, again, like NVIDIA and Apple and others, and Microsoft. And so we think that, look, stocks are not cheap, but they're not overly expensive. And so if you have a long-term time horizon, you need to have an allocation to stocks. And so we'll see how things go. There'll be volatility, but the economy is supportive of future earnings growth, which is supportive of the stock market. If interest rates go down, that's also supportive of the stock market. So barring any unanticipated shock that we don't know about, it looks like stocks are a decent place to be for the time being. Which brings us to Apple. So Apple hosted their WWDC conference. This is a conference where they announce new products. And this was much anticipated because Apple has been criticized for being behind on their AI strategy. And they announced their AI strategy this week. And their AI strategy, we thought, was pretty unique in that they formed a partnership with OpenAI, which means that anything internally they've been working on and any models they've been working on internally have obviously not gotten to the point where they're ready to release them to the consumer. But what they did was interesting is that they moved some of these models onto the device, which is really the first time anybody's doing this. So if you have the iPhone 15 Pro, the technology, the hardware on your device will be able to handle some of these models. And they plan to incorporate the AI into their existing apps, starting with Siri. And so if anybody's used Siri in the past, it's not very useful. Some people use it more than others, but if Siri becomes more like ChatGPT, then it becomes a lot more useful and a lot more adoption will happen. Apple has 1.4 billion users, active iPhone users worldwide. And so if you can imagine even a small handful of them start to use this new technology, the adoption will start to broaden out. And we think it's going to broaden out in a faster fashion than most other technologies that have come around in the last several decades. The business case for what they're doing is also super interesting. And the stock, just for your benefit, is up close to 25% in the last 6 weeks. And it's largely on the back of their announcement of their AI strategy. But from a business perspective, if you think about the fact that most people still use somewhere between the iPhone 11 and iPhone 13 because there's been no need to upgrade the phones. There's not been much innovation on the hardware side of things. If you can only get access to this AI technology on the iPhone 15 Pro and beyond, it will incentivize more and more people to actually upgrade their phones. And so that's why we think the stock has surged as much as it has. As a reminder, it's a $3 trillion company. So this is a $500 billion plus move in market cap. It's pretty massive. The other thing that we wanted to highlight about the Apple AI strategy is that they're really focused on privacy, and privacy has been a hot topic around AI, and maybe not on the consumer side, but definitely on the government side. And what Apple is doing is trying to, again, keep the AI on your device so it's private to your information and how you use it. They also announced something called the personal privacy compute function, which means that for certain AI functionality that cannot be handled at the device level, it will then go to their cloud in a private instance that's specific to your use. The compute will be done on the model in their cloud, and then all the information around that query will be deleted. And so it's a pretty interesting development. We think that this is probably the first of its kind that is able to use something like a ChatGPT, but keep your information private. And that may, again, it might not matter on the consumer level. We don't think a lot of consumers are focused on privacy, but as it pertains to the government and regulators, we do think that it's going to make a huge difference in how they look at the way Apple is using AI technology. And so that's all we had for you guys this week. Let us know, as always, if you have any questions, comments, and we'll see you next week.